Hey everybody, welcome to Mortgage Today for Monday, August 7th, 2023, and oh, what a day it was. MBS are losing 28 basis points on the morning. Stocks were up 20 points right when we woke up. Friday's significant rally, which was in response to the job report, has brought both questions and opportunities. Typically, we would expect a clear reversal of negative momentum to extend beyond just one day, especially when it occurs on a Friday. Nonetheless, the forthcoming CPI data will be crucial in confirming whether this shift in momentum is indeed sustained or meaningful. The week ahead will be dominated by the CPI report on Thursday and PPI on Friday. We will also get consumer sentiment and small business optimism. Investors are focusing on data that shows that U.S. economic strength is strong, and comments from the Federal Reserve Governor Michelle Bowman over the weekend that rates may need to rise further in order to bring down inflation. God, if somebody wasn't paying attention and reading anything, you would notice that they always say they need to get inflation down. Might take a hint on that at some point. Rocket reported second quarter origination volume at $22 billion. This was down 35% compared to the second quarter of 2022. Gain on sale margin fell to 2.67% from 2.92%. Adjusted revenue was $1 billion. For the third quarter, Rocket expects adjusted revenue to decline to the range of $850 million to $1 billion. The company continues to cut costs and just announced a new CEO. Apartments are becoming the next headache in commercial real estate sector. Office has been a disaster post-COVID, but the amount of supply that is under construction is at record levels. This is hard to square with single-family housing inventory that is 25% of 2007 levels, but it's still true. Bulging sales of US Treasuries are about to deliver a major test of investor demand and determine whether selloff has room to run as the market braces for the biggest round of refunding auctions since last year. Yields have surged since late July and climbed again Monday amid evidence of a resilient U.S. economy and after the Treasury shocked traders last week when it signaled greater borrowing needs. A rising U.S. budget deficit and poor fiscal outlook at a time of near full employment contributed to a move by Fitch Ratings to strip the U.S. off of its top rating last week. Bond traders are keeping their options open both literally and figuratively. Open interest in Treasury options increased to start the new week, but that's neither a surprise nor particularly relevant for our purposes. MBS closed down 17 basis points on the day. Stocks picked up 40.41 points. And then today we are at 98.89, which puts us right in this wide range, which has been pretty bouncy so far, where the ceiling is the 25-day moving average at 99.206 and the floor is 98.716. We'll have to see how the week plays out.